Hi there, Serial Trader here. Let's have a look at Netflix. Now, given the recent bearishness we've seen in the market and the potential for a larger trend change, uh, I thought, well, let's go look for some downside trade setups, see if there are any good ones out there. Um, because of course, as a trader, you don't have to make money only on the long side. You can absolutely make money in the other direction as well. You know, basically all your technical analysis stuff, you just flip it upside down in a downtrend, and it works basically the same way. Certainly, Elliott Wave absolutely works to the downside just as it does to the upside. So that being said, I found the chart of Netflix, NFLX, and it looks quite bearish here. So from the all-time high at 423.21, we have a pretty clean, clear 1, 2, 3, 4, 5 down, and that's for either a larger 1 or a larger A. We don't know yet, okay? And then we have an ABC up for 2 or for B. Again, we don't know yet. And then we're either, basically in progress of this third leg down in wave C or in wave 3. Okay? Now, that doesn't matter from a trading perspective. We've got a 5 down, we've got a 3 up, and I just want to point out, okay, so I did a Fibonacci retracement of this initial 5 down, and we just came up to the 618 retracement level, just nicked past it a couple times, and fell right down. So beautiful 618 retracement, and remember that is the most common retracement level for a wave 2. And just because of that, I'll tentatively label that we have a 1 down, 2 up, and now a 3 down in progress, although I wouldn't worry too much about that at this point. The wave count can certainly change, but the pattern is what it is. Also, so I have another 618 relationship, and that was between 618, and that's the distance traveled in wave A, measured from the termination point of wave B, and the 618 relationship for wave C, which is actually a weak wave C, so kind of a tell of underlying weakness that we only made the 618 relationship between A and C. That lined up right nicely with the 618 retracement of the overall decline, and again, now we're just collapsing off that. Also, this parallel trend channel I drew, you see we could barely even stay within it, and then by the time we got to the end of wave C, it was actually acting resistance to the bottom of that channel. So that's also, from that channeling perspective, a sign of underlying weakness, and again, just coming down nicely. So this is the daily chart. I'll kind of leave that with you as far as the wave count goes, but the 1.0 relationship, so if this is an A down and a B up instead of a 1-2, we'd be looking at that 1.0 relationship as a common objective, and that'd be 274. So even that, from where we are currently, 350-ish down to 274, that's a huge move down. And if we do come down a third wave, more powerful, the 1-6-1-8 relationship between 1 and 2, that would hit around 205. So from 350 to 205, that is a beautiful, beautiful downside opportunity if we make it, even if we just make the equality relationship. Or never mind that, even if we just come down to test the low and have kind of a truncated third leg, can't make much progress past the initial low, that's still as low as 310.93 from 350, so still good. The bottom line here is this is looking good for a short side trade. And with that, let's go to the candlestick chart, because there's other things going on other than just the Elliott wave pattern there, which looks very good. So this is the daily chart of Netflix. Nothing overly compelling from the candlestick side of things on the daily chart, other than obviously we have some red candlesticks from the recent swing high here. But we've gone below the T line. The 3T line is crossing below the T line. We've actually closed below the 50-day simple moving average. So obviously some technical breakdown there just based on that stuff. 200-day moving average comes in at 322. Could see some sort of reaction off of there, but I doubt it holds. Our oscillator got into the overbought condition on this swing high here, and now we're coming down and we're not oversold, so the door is certainly open to further selling based on that. And I wanted to show you the weekly candlestick chart of Netflix because look at that. We got a nice weekly bearish engulfing candlestick just this most recent week that we closed. So we engulfed 1, 2, 3 prior weeks because this week interrupted it because this week's real body fell out of the range of this week's real body. But still, engulfing 3 prior weeks, a close below the weekly T-line. It's a very powerful sell signal right there, okay? Now, that being said, I was looking at the option chain, and I'm liking December options here for Netflix, December puts in particular, and I'll explain why. So if we just take, going back to this chart momentarily, if we just take a kind of a measurement of how long this initial decline took, and then project that amount of time off of where we just had our, wave 2 or wave B peak, that brings us to just about the end of November, November 28th or 29th. So that being said, should be plenty of time to give ourselves if we buy December puts. And I like something around the 380 or 370 strike puts, okay? Now, keep in mind these aren't cheap options, but there's a reason for that. It's a $300+ stock, so it's all relative. But just one contract, you'd be looking over $4,000, closer to 4,500 if you go with the 380 strike. And obviously, multiply the number of contracts by how much that is. So 10 contracts, $40,000, $45,000, whatever. So I think for a lot of smaller traders, one or two contracts would probably be suitable. Myself, I'm going to go a little bigger than that. Now I like to have that around that 0.6 delta, 0.59, 0.6 delta, 0.62, 0.59. So these two strikes, you can split hairs here, but this is what I'd be looking at for buying puts. Now, if you think the downside is kind of limited in Netflix, or you just simply want to offset the cost of these expensive puts that you're buying, you could sell, like, let's go here. So say you think we're just going to bottom here, let's say around 300, which is possible, although I think we could have some more juice to the downside myself. But say we bottom at 300, or you think we're going to bottom at 300, you could sell the 300 strike puts against the long, 380s or 375s, and reduce the cost of those by almost $10, and still have all the downside potential up to that 300 strike. So that's not a bad idea if you just want to do a put spread, vertical spread. So buy the 380s or buy the 375s and sell an equal quantity of the 300s against that, or whatever strike you choose. Me personally, I'll be looking to buy the puts outright, hold them, because I do think we're going to have a nice move to the downside, so I don't want to limit that by selling against it yet. But then maybe as a follow-up action, say we get down into the low 300s, we've had a nice move down, these 380s are worth, 60 or 80% more than they currently are, or something like that. At that point, sell some puts against it, convert to a spread, a much more attractive spread, obviously, now that you've actually had a big move in your favor. So that's how I'm looking at Netflix here. And weekly bearish engulfing. Elliott wave looks bearish. Fibonacci relationships looking great. Losing our moving averages here. Everything's just set up for a nice downside trade here. And just given the broader market conditions kind of breaking down as they are, and I went through that in my last broader market update video, I think this is a nice position to be putting on here. All right, I'll leave that with you. Serial Trader signing off.